Hello and welcome to Crypto Weeklies. In this video, we are going to discuss the crypto market recovery through the lens of Ethereum. None of the content is financial advice. We did cover Bitcoin Cash on our channel yesterday. If you are interested, you can check that video on the YouTube channel. Bitcoin Cash is up by about 27%. Other mentionable token up again, none of the content financial advice up. Cardano and its token ADA at around 25%, roughly speaking, Aave up by about 17%, Link up by 15%. Some other names up more than 10%, some of the recent and the older cryptos. Ether up by about 6.5% on a day where majority of cryptos are up by quite a lot. Says that Ether has not attests to the fact that Ether has still yet not taken the control of the crypto market recovery. You can see again most of the names are again almost 54 cryptos in the top 100 are recovered better than Ether at this point in time. Let's look at Ether in terms of the market cap and price analysis. Again, this token had a deflationary three to last couple of years. Now the supply is at around 120 million. You can see the market cap and the price growth. Again, there hasn't been any growth, but you can see essentially the decline in market cap and the price is essentially one and the same. That means whatever growth or lack of growth happens in terms of tokenomics, at least is reflected across both the metrics. Ether is down by about 40% over the last year. You can see, you can take any random name over the last 1 year. You can see that they have been up. Again, Sui up by 65%. Let's take another example. Let's say let's pick Arbitrum over here. Again, that's an ETH layer 2 that is down. Again, that is again correlated with ETH. Let's click on HBAR over here. You can see over the last 1 year or so it's up by about 100%. So ETH has not performed well. Again, you can see that through the lens of ETH dominance, which is down now at around 9%. You can see historically speaking, again, let's take 1 year as an example. In early March of 2024, ETH dominance was at around 17-18%, almost 2x from the current level. Now it's at 9%. To go across all of the time periods, let's take 2022 start of the bear market as an example. Early 2022 Bitcoin dominance was at around 39%, ETH dominance was at 20%. Now that we are in 2025, Bitcoin dominance is at around, roughly speaking, 60%. ETH dominance is at less than 10%. So that's how we could measure the relative performance of ETH or underperformance of ETH. Now going towards machine learning price forecast for 2025 for ETH. If ETH exhibits any euphoria, again, first the directionality related forecast available on this channel, cryptoweeklies.com, link on the bottom of your screen. All of the charts are available over there. In terms of all things equal, the base case says that there is likelihood that the price trends up with time than down with time. So that is a good sign for ETH. On its USD pair, it has put a series of higher highs and higher lows. Again, there is a triple top scenario over here, but again, gold also had a triple top not too long ago, and then it broke out of that triple top. You can see that over here. So this is again a gold weekly chart. So first top in 2020, then second top in 2022, and the third potential top again in 2023 middle of May. And since then there was a decline, and then finally in the fourth attempt gold did have a topping pattern, and then the rally continued to progress. Let's say if ETH has a similar fourth top in mind in the next 6 months, that is the non-euphoria bull case for ETH per the machine learning model trained on the weekly price of Ether since 2017 November. You can see how this model is trained and what confidence levels are and how they are calculated. The the bull case shortly telling at 68 percentile or 1 standard deviation confidence level is price action between 2300 to about 3700 in the next 6 months. This is the non-euphoria or the relatively muted bull case for Ether. The 2 standard deviation bull case for Ether is ETH to break out from this triple top structure to put a high between in the next 6 months, the price action between $2500 at $70 to $5500. That's the 2 standard deviation ceiling for Ether in the next 6 months. If we say that there is a 3 standard deviation recovery for Ether where there is a blow off top scenario in the next 6 months in the market, taking a parabolic move, that could take Ether between 2700 and about 8000. So that is 3 ways to predict tops for Ether. Again, the likelihood scenario is established, or the directionality is established by this forecast at a base case level. They provide the directionality. The 1, 2 and 3 standard deviation flavor of the peak is established by the market forces. Again, if market does have a recovery in the middle of year of 2025 and has a great end to the year of 2025, ETH could be somewhere, if you take as average of these two scenarios, between 5.5k and 8k, that puts it somewhere close to that between 6.5 and 7k for this cycle, and that could be the peak for ETH. Whereas if ETH and the wider crypto market does not have that 2 standard deviation euphoria case, then it could make its way to that $3,800 level. So now that we have covered ETH from this perspective, we'll focus some attention on Bitcoin versus ETH, and also SMA, that is 20-week SMA journey of first of all ETH, and then we'll overlay Bitcoin on it. This is risk is broken down into 5 categories, low in increments of 20%. Lowest risk, that is between 0 to 20%. That is when DCAing ETH makes the most amount of sense. The second best is between 20 to 40% risk. Right now, if we look at ETH, right now the risk is 17%. That means it is, for this model, it is the best time to accumulate Ether. And ETH, historically speaking, in the bull markets does eventually go to that highest risk between 80% and 100%. The most ETH has gone highs for ETH for this market cycle was at around in March of 2024, when the first time ETH went to that 4k level that we discussed over here, close to that 3800, and this is the weekly average. But if you can see over here, ETH did go to, at that point in time, it did make its way to that first, again over here you can see it at a weekly level, the highs were at around $4,000. Now they have again, the price is at about 50% of that point in time. Now we can say that the ETH risk that we just were discussing over here, if let's say we were to go back to that 80% from this base of 17%, with a better relationship with a 20-week moving average, that peak could be at 80%, could be at around somewhere between 5.5 to 6k. So I can we have this model to estimate. Let's say this is the 20-week moving SMA based model, same model. Instead of plotting it on this kind of normalized axis, this is price color coded with the SMA risk. Again, this model identified similar less than 10% risk in June of 2022. You can see over here in June of 2022, that's when risk were down here. Now risk is at around 18%, similar to that 17.5% that we just visited over here. So let's say if in this model, again we are looking for first of all places where Ether, it makes the most amount of sense to DCA ETH. This is the hypothesis for ETH. Again, it's a higher cap altcoin, slightly better than the rest of the altcoin market in terms of performance and longevity. So if the hypothesis is only to DCA ETH when the risks are less than 30%, this model does help again has provided is, at least since 2021, has provided the local minima for ETH, and when DCA made the most amount of sense. Again, if you can go even down the risk curve, less than 20% ETH, less than 20% risk, only accumulating during those phases. Again, this also does, model does, and this is not some retroactively fitted model. This is just taking into consideration what is the price and what is the 20-week moving average at any point in time. And even lower than that, less than 10% risk. Again, over here there was a false positive over there, but that came off a like a higher magnitude drop from the eventual market cycle peak to early January 2022 drop. But again, this in in the midterm year 2022 itself, this model did a great job in identifying the bottom for ETH for this market cycle. If we go to that same hypothesis and again ETH to that 75% risk and ask this model what could be the price at 75% risk, this model at this point in time says $4,875 ETH would be considered 75% in terms of risk level, and the eventual peak established by this model or forecasted by this model is somewhere between $5,000 and $5,500. Again, risk higher than 80%. When it goes higher than 80%, again it's very hard to predict how high can it go from that point in time, but again a $500 range between 5k and $5,466, that's the estimate for this model. If we look at the DCA model, which is again based off a similar price color coded with respect to risk based off a polynomial regression based model, says that right now the price of ETH is so low that it is per this model again the best time to DCA ETH. Again, this model has done a great job identifying the June bottom as well as the November 2022 bottom, June and November. Now is the third time where the price has gone so substantially lower than the fair value. Fair value for ETH established by this model is at around $4,800. So if we ask this model what could be a peak scenario for ETH, again per this model anything above 50% risk is considered high risk at this phase of the market cycle, and the top predicted by this model is somewhere between $6,900 for ETH. And if we take that 75% as a peak, it's that at around $9,300. So that's the bull case for ETH per this model. We have a composite of all the model to average out some of the noise in any one individual model. That is, again, we can take that before that we do that, we will consider this regression based approach, again the polynomial regression function in terms of establishing the fair value coming in around 4,700 or so. If we say that ETH has a 1 standard deviation residual move to the upside like it did from the fair value in early to mid of 2024, that move is still in the cards. If we have that hypothesis, then that could take ETH as high as about $7,500 at this point in time. And again, if it takes 3 to 4 more months, that this yellow line could reach at around 8k level in the next 3 to 6 months. So that is the non-Euphoria case for ETH. The Euphoria case occurs after the 1 standard deviation scenario has been breached. That is, the 1 standard deviation residual applied to the fair value regression has been successfully the rally has successfully crossed this yellow line. That's when the Euphoria case starts. The Euphoria ceiling for ETH is at around 12k, but you can see that this last time in the last bull run, ETH barely crossed the 2 standard deviation ceiling. And as the asset class matures, especially with ETH with a continued decline in the dominance, you could say that this time around the 2 standard deviation bull case is not in cards for ETH. So the higher end for ETH could be somewhere between average of the 1 standard deviation and 2 standard deviation, that is between 7.5k and 12k. So if we take roughly speaking 18 or 19k divided by 2, that gets ETH as high as about 9.5k. That is one bullish estimation for ETH's price action. All in all, again, if we want to focus on again, before we focus on the eventual bull run peak for ETH, again the higher end estimated by again at our per hour model as a composite of all the model at around 11k. The way it gets to that is maintaining right now 11% risk on the regression model that we saw. Now the model that we will discuss, the time weighted average price model, 34%, SMA model 17% weighted risk less than 20%. Just a risk reward based analysis for the peak at around 11k. The time weighted average price model helped identify the best accumulation zone in the bear market, where the price was below the blue line. Again, as the asset matures, the next time around in the bear market, the price could be just shy of this blue line. Again, the same thing happened with Bitcoin. Bitcoin on its time weighted average price model never made it to the blue line again. As the asset gets more and more adoption, going below the time weighted average price becomes more hard. Right now the risk that we said is at around somewhere between for accumulation is at somewhere at around 35%, as we discussed in that in the composite evaluation of ETH. So all in all, the first levels for ETH to kind of watch is if it can go to that fair value again, crossing that triple top established at around 4k. If it manages to go beyond that, that is again on the first level of resistance at around $3,700, and the secondary level at around 5.5k, and if that is done and dusted, then the 7.5k makes the most amount of sense for ETH. And predicting again any price on US dollar terms for ETH has been a challenge, especially since ETH has underperformed the wider crypto market, and again nothing has changed on that regard. But if you believe that that ETH is still a quality project, and if the risk levels are sufficiently low, as they have been pointed out per the DCA model, less than 10% risk, SMA model, the risk levels, the second best time to DCA, time weighted average price model sufficiently low at around 30% risk, regression based fair value at around 4.5k. So all in all, per our interpretation, that's the likelihood for ETH, and also the directionality related forecast pointing to a higher valuation points to ETH going to that 4k level sometime this year. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.